So this is the second video for this portfolio. As you can see, I'm down roughly $700. It was 800 like 10 minutes ago, but 500 of those losses can be attributed to the day trading I was doing this morning, and that's Tesla. And as you know, that Tesla is a very volatile name, and I've been trying to get into a short-term swing position yesterday, but the order just didn't go through. So I tried this morning, and yeah, I got into the high and it dropped, so I got stopped out of it. So the thing about these day trading and swing trading, especially like short-term weekly options, you cannot stay in it too long. It's either the time decay gonna kill you, or if the stock going the different direction, opposite direction of your options, then you really get destroyed in a short amount of time. So that's why you should not commit more than 10% of your capital into this type of trading. So let me show you my portfolio. The video I made yesterday, it looks a bit different, but the thing is, if you look at these stocks, it's all the same. 1,000 Goose, 250 Store, and there's 45 Shirts, a rig, still the main component of this portfolio. What I did today was that I sold Store Capital. Let me just show you this. I don't know why it's not showing here in the history, even though I just did it this morning. So as you can see, it got filled this morning, well, this afternoon around 1 o'clock, and I sold all 20 of it, made about net profit of 1K, basically subtracting the loss from Tesla. The reason for that is because I want to get into Apple. As you know, Apple and other fan names, the tech giants, they have been really destroyed in the past few weeks. And as you can see that right after the split, the stock surged to all-time high, and then after that it's downhill from that point on. So I try to getting at this level is because for those of you who follow Apple, you know that this is a support point for Apple around like 113, 114 area. So this support has been acting pretty well in my opinion. So I don't think it's gonna go anywhere below that. That's why I jumped in, and even if it does, I don't mind. I got into a calendar spread, and this is the reason of this video. I want to show you what I mean by calendar spread. So as you can see, I got 12 contracts here, 6 calls, and well, 6 calls that I bought, and then 6 calls that I sold. The reason for this is because a calendar spread basically is when you buy two different options with the same strike price but at different dates. So as you can see here, I got 125 strike price for both of the options that I sold and option that I bought. So it doesn't really matter what date you bought. As you can see, I have one option that expired in November and 5 options that expire in December, which is the long option. So these are the options that I basically purchased. So it doesn't matter what it doesn't have to be the same exact date to be for it to consider as a calendar spread, as long as when you buy the same strike price and at 2 different occasions, 2 different expiration dates. And the option that I sold, it's next week option, and I got around, give or take, $1 credit for each option that I sold. So I will get around $600. And the reason for this setup is because if you look at the Apple chart here, again, this is median swing trading, which is something that I like to do. And if you look at this area, so 125 area, I think that's where the next resistance, the major resistance is. And I don't think Apple is going to go to 125 by next week. So that means I can keep this whole premium because it expired below 125. And when a call option expired below its strike price, you get to keep the premium of the one that you basically sell. So I get to keep this whole $600. And my long call depend on how much Apple is. If Apple is like 120, by the end of next week, obviously my long option will worth a lot more. But if my long option is below like 113, that's the area I bought, where it stays at 113, I'm probably going to lose some money. But the thing is, this option doesn't expire until November or December, so I should be fine. And basically, I'll wait until next week to see what I'm gonna do. If Apple does indeed go above 125 by the end of next week, maybe we got some major headlines and stuff, news like that. I don't think so, but if it does, I'll still make money, even though this is the same strike price. But the thing is, if it go above that 125 level to like 130, I'll be making around $400. Basically, there's an option calculator online that you can use. If you have a Fidelity account, you can also use the option calculator to calculate your profit. So if Apple does go above 125, let's say $130, both of these contracts will worth more. But the thing is, my long contract, the one expiring in November and December, will worth more than the option that expired at the end of next week. Depending on how much more you're gonna go, like if it goes to like 150 for some odd reasons, then it will cap the gains, because my short options will worth a lot more than this long option, because these options have more intrinsic value in there. But that's getting into the technical. It doesn't really matter, but just so that you know, even if Apple does go above 125, I'll still be in profit. The only way that I'm not in profit is when Apple stays below 125 by November or December, which is like 2-3 months out. So I should be fine. I don't think Apple is going to stay around this area for like 2 or 3 months. But if it does, then I'll lose some money, but I won't lose a lot of money. But overall, I think that another scenario, if Apple goes below to, let's say, $100 level, right here, if it does go below $100 level, my strategy is to basically buy more Apple. I don't mind holding Apple. I've been trying to get into Apple for a long time. I just didn't get the chance to do it. And right now, like, you cannot time the market. Like, this might be a support, but it's technical. It could be, if there's a major news headline that's negative, it could definitely bring Apple down to 100. You just don't know. But the thing is, I don't want to miss this opportunity, and I don't want to go in without any protection. So therefore, I thought calendar spread might be the best scenario in this case. So yeah, other than that, I also add a position in Peloton, as you can see here. This is an earnings play. I don't like to play earning, but the thing is, after that 600 loss, I figured that I probably shouldn't do more day trading. And as you know, I usually put like 1K on the line for day trading, so that the difference, I took out some, I didn't commit all, like $500. I lost $100, so I got $500 more to basically to gamble, if you will. I didn't want to commit it to the whole Tesla and lose it all. So I thought, hey, Peloton had run up a lot. Maybe that they will pull back a little bit after the earnings. So I thought I might put some money here. Again, $1,000, that's all I'm going to use for gambling, short-term, like very short-term swing trading and day trading. If it doesn't go well, that's fine, because the money, it's house's money basically, because I made it back already with my swing trading. But if I'm right, I'm still gonna commit $1,000. I'm not gonna, like, if I made $1,000 off the $1,000, I'm not gonna put $2,000 on the line. I'm gonna keep the 1,000, put it into one of the longer term stocks. And yeah, I don't want to day trading with more than $1,000. But yeah, that's my take, and that's basically what a calendar spread is. And yeah, that will be all.